All right, thanks everybody for coming. We're going to talk about trading journals and how to create a trading journal and why they are important. First, I want to show you what we're doing on the calendars every day and how those tie into your trading journal. Now, if you're not, haven't joined in or anything else on the calendars, you can find out information just going back to the website, Common Sense Commodities, and just click on calendars and it'll tell you what that's about. So I'm not going to get into that right now. But webinars and trade alerts, we do webinars every morning from 8 a.m. till 9:30 a.m. Central Time. So that's 9 till 10:30 on the East Coast. And I have several different calendars, as you can see here, set up. And I'll tie this into a trading journal here in a minute. As you can see, we have a calendar here for webinars and trade alerts that go out, economic reports, seasonal trades. Next seasonal trade is coming out on Friday. USDA reports, crop reports came out today. Not crop reports, but USDA reports. We've got livestock slaughter reports tomorrow. And special events you'll see over here. All right, and trading journals. How many people are not using a trading journal? If you are using a trading journal, if you're using a trading journal, just type in Y or yes or something in the chat box and let me know. No. Shame on you. I'm going to show you why it's so important. Because you're going to learn more from your journals than anything else, and I'll show you why. All right, there's a couple of different applications that are very good for keeping a trading journal. We're going to talk mostly about Evernote tonight. Also, you can use OneNote, which is an application that comes from Microsoft. And Evernote is a free application, freeware application, and that's at evernote.com. It doesn't cost you anything, it's free. And let's take a look at what a trading journal is. To start with, you'll see over here under webinars and trade alerts, if I send out a trade alert like here today, or here's the webinar recordings and nat gas, I keep these in my journal, and my journal happens to be in Evernote. So people that are members of the calendars can come in and they can click and they can actually see my Evernote trading journal. And you can click on a chart and that chart will pop up and show you, what the details of that particular order was. I can also do audio recordings. I have to do it within my own Evernote, or you have to download it if you want to listen to it. But as you can see, nat gas, I got out of that trade today. And I made a little note up here, exited, made 550. It was such a big drop, I just wanted to take the money off the table. So that's just one example of OneNote, and I'll show you a whole bunch more. All right, let's go back over here to webinars and trade alerts and go down here to another one. Well, I'll go back a day and show you some. As you can see, a pretty detailed list over here of different trade alerts. Here's one on the British pound. And as you can see, we have two different charts in there. I was only in that trade for the 3rd and got out on the 9th, so I wasn't in that trade for very long. But I keep up with what I am actually doing on each one of those positions. And here's my Evernote journal itself. All right, here are trades, as you can see here, 516. And I don't know if you're familiar. Is anybody not familiar with Evernote? Just type in no if you're not, and I'll explain a little bit about what Evernote is. Okay, Tom. Evernote is, like I said, it's a freeware application, and it allows you to create notebooks. Think of a spiral notebook. And within that spiral notebook, you can have different sections. As an example here, my trading journal, which I just set up, we're going to do one here in a minute. You could consider my trading journal a notebook. And within that notebook, you can have different sections, like here's June, here's May. So you could click into May, and then as you can see over here, you would click over here and you have a new note. And you could call that note, let's say that you were looking at corn for July. All right, you come down here and you can automatically date stamp it. So you have a date. And you can also do an audio recording. Just click on the audio record button and record. And now I'm recording, and it's going to make an audio note on that. And I'll explain to you why that's real important for you. And then you can cut and paste into it. So let's just stop that recording. And you'll see that the recording pops up here. And you can probably hear it. All right. So if you were looking at trading corn, and let's just pull up a chart. It could be any chart that you'd want it to be. Let's look at some of my open positions for today. I'm in hogs, I'm in wheat, and I'm in the Japanese yen. So let's say that you wanted to do something on the Japanese yen. Well, I've already got that chart up. I put seasonal trades on it. You can have your indicators that you like to use. Anything else that you're looking at, you can analyze the chart, make notes on it, do anything that you want to on the chart. And then I use a little program called Snagit, S-N-A-G-I-T. There's a lot of different screen share capture programs on the market. I've just been using this one for a long time. And so I'm going to now just cut, or copy, I should say. Copy that. And I have to go to the other screen because it jumped to the other screen. Then I'm going to go down to my Evernote Trading Journal. Oops. Corn. Let's rename this. All right. Now you can also obviously come in here and you can make text notes. It's really unlimited on how many notes that you can make. And you can also obviously paste in a screen. Now, I'll tell you why I think that it's so important for you to do this. How many times have you ever gotten into a trade and you're sitting there and a few days pass, you have some kind of drawdown or you have some kind of profits and you're saying, gosh, should I really get out of this? Should I stay in this? And you're undecided about what you want to do. Well, you always go back to your trading notes. And if you made good detailed notes about why you got into that trade in a recording, go back and listen to it. All right. And it will give you some clues on why you got into that. Maybe your note would say, let's just do another one here. Oops. I was looking at the Japanese yen. You might be talking to yourself. I got into this trade over here. You could say that indicators have been coming down. Slow stochastics came down. Market's looking very bearish. Seasonally, it's looking bearish. I decided to get into that. I looked at how I wanted to get into that. I looked at futures positions. I looked at options. And actually what I ended up doing, I bought a put, has 16 days left on it, and then I sold 2 calls to help pay for that put, which you can't see. You can see it on the chart over here. All right. So I sold 2 calls up here for $275, and I bought a put. My net cost on that was about, I think, $350 or so. And so you make notes about that trade that you're in, and it's real good to do an audio recording. And then if you have questions about that trade, you can always go back and listen to yourself and say, this is why I got into this trade. This is where I think that market is going. I decided that I could take the risk of 500 or whatever risk that you wanted to take on it, because I know that it's very difficult sometimes as a trader to sit there and to be into a trade, and our 2 worst fears as a trader are fear and greed. You're fearful of a loss, then you get greedy on something and you keep saying there's some more money on that, there's some more money on that, there's more money on that, I'm hanging in. and all of a sudden the trade turns against you. Well, if you had notes, which I'll show you some of my notes on some of my journals, again here in a minute, then you can go back and look at your notes and listen to your audio recording and tell yourself, this is why I did it. This is why I got into that trade. All right?
Okay, now I'm recording. I'm just going to make an audio note on that. All right.
Now you can cancel it. You can start it over. But you can move stuff around. You can put your notes anywhere that you want to. But it's really critical for you to take very good, detailed notes about why you got into that trade. Maybe you got into it, you said, well, moving averages crossed over. And at the same time, moving averages crossed over, it's getting into a seasonal pattern where the price is supposed to be coming down. I'll put up a Fibonacci chart as an example. You know, whatever your notes are to yourself about why you entered that trade, you need to put that into your recording. You need to put that into your text. All right. As you can see, my target, I got in down here on these puts, and I sold these calls. And my target down here is the zigzag tool, and I know that because I put that into my notes. All right. So I'll stay into this position until my target is hit, or unless I start running out of time and the market starts going sideways on this spread that I've got on. And it's going to have a lot of time decay because I've only got 16 days left on it. Now I can look down and say, okay, I'm into that position. I'm up 725 on one side, 150 on the other side. So I'm up say about $900 on that position. So I might say, well, that's enough. I want to get out of that position and make a note to yourself, this is why I got out of that trade. And then after your trades are over, it's a good idea, like once a week, to go back and look at your trading journal and go through and say, okay, this is why I got into these trades. And you can also make tags in Evernote. I've got tags, winning trades, losing trades. You know, if I have a losing trade, grains, you know, so you can go back and search and do different searches. Obviously, this is a currency. So you can make a note, and then you can sort by your tags. You can search by your tags, winning trade, losing trades, and I can tell you that you're going to learn more by your losing trades than you are by your winning trades. I got out of copper with a $67 loss. I got out of the bond, which was a foolish thing to do today. I got out of that bond. I exited that. It's at a FOMC meeting today. It came out, and how did I know that came out? It's because it's on my calendar. All right, I have to go over here to today, and I knew that the FOMC meeting was coming out today, and that's a major market moving report. All right, and here's my notes that I include and what that report is about, what it can do, you know, the importance of it. And these are actually emails that go out. So I send these emails out, and I set up different times for them to go out. And on the bigger events like FOMC, I send a reminder a day before. I send a second reminder an hour before. I send it to certain groups that have joined the calendars. So they'll actually get an email a day before and then an hour before that event takes place. Because how many times have you ever been caught on the wrong side of an economic report or a USDA or a crop report or something like that, and all of a sudden you were up $1,000 on a trade, and you look down and when all of a sudden you're down $750 or $1,000, you say, what in the world happened? Well, usually those are some type of report that came out. Let's go back over here and look at the Aussie dollar. And I'll just give you a good example of the Aussie. Let's go back into meats, and I'll change this. I'll change this, and I'll go down here, and I'll open currencies. And by the way, I keep a chart book on each one of the different groups. Like I keep a chart book on currencies. Oh, which one again? I just saw. Which one again, please? How do you like track and trade This is my demo account, that's correct. And I love Track and Trade. I've been using Track and Trade for about 20 years. I use it for my demo account for the students in the webinars, and I also trade a live account with Track and Trade also. It's the only trading software that I will use. All right, but Aussie dollar, let's look back here at the Aussie dollar. All right, now I keep seasonals here on my chart, and there's another program that I use which is called Trade Mentor, or Trade Miner, I'm sorry. And Trade Miner will actually go back in and tell you if you enter a certain market on a certain date, and I mark those dates off here, between these dates, how did that trade do? All right, let's go back in and look at trades here. Australian dollars, Aussie dollar. That was last month that came out, or was it this month? I think it was at the beginning of this month. There's the Aussie. All right, and I got whacked on the Aussie. Aussie didn't. No, that was last month. I'm sorry. That was the Aussie dollar last month. I lost $3,600 on the Aussie. All right, and the reason I lost $3,600 is because I did something very, very stupid. And I'll show you what I did. I jumped into a trade, and I got long that market. And I got long that market. I just sold 3 puts, which makes me long, on 426. I went back to my calendar the next day because the market dropped so hard, and wanted to find out, you know, if there was some kind of report or something that came out that could have caused that. And so I went back to my calendars. Now, what day was that on? That was on the 27th when that came out. So I went back to my calendar the next day after I got in, and on the 27th, I have to go back again. Hold on. Oh, that was last month. No, that was, yeah. Go back again to the 27th, and that was FOMAC press conference, calendar report. No, that was the Japanese yen, the 27th of this month. But anyway, there was a report that came out on the 27th on the Aussie dollar, and it happened that night at like 8 o'clock that night because of all Australian time. And when that report, and I should not have been into that trade knowing that there was it the 24th? Here it is. No. Anyway, there was an event that came out that was a banking event, a big event for the Australian dollar. And I jumped into that trade in the afternoon and it didn't even check my own economics calendar. So I didn't do something that I'm sitting here telling you to do. And didn't even go back and check to see if there was something coming out that day that could have affected that market. So let's go over here to today. And here's today, the 18th. We have a crude oil report that came out, and we had FOMAC meetings today. So if you don't know what FOMC meetings are, they're government meetings, and they really are market movers. And so I don't want to get into a trade, the morning before that report comes out, a market that could be affected by that, which would be your currencies, indices, S&P, the US dollar, bonds, or anything like that. I don't want to get into that trade if a report is coming out. All right. Same thing on livestock slaughter. That comes out tomorrow, and that comes out at 3 o'clock tomorrow afternoon. So I'm already in hogs over here under open orders, and I'm up about 460 on hogs right now. Now I know that there's a report that's coming out tomorrow on livestock, and based on that, on this livestock report, I need to enlarge it a little bit so I can see it. It tells me that market cattle, calves, sheep, lambs, hogs, and pig slaughters. That's going to affect the hog market. All right. So I want to be real careful tomorrow and start locking in some profits, or be very, very cautious, or even get out of that trade in the morning when that trade opens. That market opens, I believe, at 9 o'clock or so. So I may be getting out of that market and just taking profits in the morning, because I don't want to be in hogs with a USDA, not USDA, yeah, USDA report coming out on something that could affect that trade. So you need to be aware that those things are taking place, right? Let's go back and look at some more in the trading journal. All right, here's bean oil. I had a small loss. I got out of that, but you can see all my charts and everything else and notes that I put in, audio recordings. I record audio notes to myself and what happened. So when I get out of a trade, I like to make a note why I got out. All right. And I said, I'm too heavy into the grains. I'd rather take a little loss than, of course, a big one. I'm still waiting on the really big move for the month. And so I just got out. I was in that trade. I was filled overnight, and I got out because it started going against me. All right. Canadian dollar, I lost $30 on that one. Here's one, a losing trade, winning trades. I got short this market, and what market was that? RBOB. There's my notes on RBOB. Why I got in, audio recordings to myself about why I got in. And the people that subscribe to the calendar programs, they get access to my trading journals. So every day they can go back and they can look after the webinars and see what we did. And the webinars are also recorded, as you can see here, and they're recorded on YouTube. So if somebody's, can't make the meeting, they can go back in and watch the webinars on YouTube, right? And like I said, those last for hour and a half every morning, Monday through Friday, all right? Here's Nat Gas. I think I got out of that. I go back to my journal, look at why I got out of that, all right? Here's my audio note. I got in it back here. Made some notes. There's my recorded note on it. And you can listen to the audio notes that I make and see the text that I made, that I put in. And today I got out of that. I exited that position with $550. I said it's such a big drop, I just took the money off the table. Because typically what will happen are one or two things. You'll have a pullback the following day, and I might short it again at a better price, or the market, could obviously fall further down. But I had support down in here. It wasn't that far away, and $550 isn't a great sum of money, but it's $550 that was laying on the table. I think this month we're up, what was it, 6,000 for the trades this month. Last month we had a loss of about 800. The month before we made 7,200. So we're up about 25% on a $50,000 account. We're doing about 8 or 9% a month, right? Based on the trades that are, put out during the webinars or after the webinars that I send out. And so if I do a trade, I actually will send that trade out. I'll just go back and show you some that went back out here. You can see that I did a trade update here. Corn, I lowered the stop and I locked in $400, and that goes out as an email. So it goes out as an email with exactly what I did, with a link to the trading journal, so people can go in and look at the trading journal and see what my thought process was behind getting in or getting out of that trade. All right. Does anybody have any questions so far? Okay. Tom, you're in the webinars every day. And we spend a good bit of time every morning going through all the different markets and looking at possible trades to put on and record those. Also, I have seasonals, as you can see over here, and these are seasonal trades. This one happens to be coming out on Thursday, and it's telling you the U.S. Treasury bond should be bullish from May the 5th. All right. Now, I was in the Treasury bond. I got out today because I was short the bond. And on Thursday, seasonally, that market seasonally from May the 6th through May the 28th, that market is typically bullish. All right. So I was in a period of time where that market was supposed to be bullish, and I was going counter trend on it. And then I had the FOMC meeting coming out. And I transpose, as you can see, I transpose this information over to my charts. So if I'm looking at a chart, you can actually see on the charts, I've transposed information over from my seasonals, and I know that that is supposed to be bearish from May the 2nd through May the 24th. On a scale of 1 to 5, it was rated a 5.0 with high probabilities, 5 wins and 1 loss. It's got 6 years of history. And I could go back into my seasonals and look and see exactly how much it made or lost each year if I wanted to. I put a little icon up here for, you know, a bear. So I can just actually just visualize on my chart. That market is supposed to be bearish. I use these vertical lines as the begin date and the end date. If it's a bearish market, I'll use red lines. If it's a bullish market, I'll use green lines. Here's the Japanese yen. That was supposed to be bearish. All right, I got bearish on that market. You can see back in here. And I sold the puts, and like I said a while ago, I'm up on that trade, $900 or whatever it is. All right, New Zealand dollar, that is also supposed to be bearish this period of time, from May the 2nd through May the 25th. It was rated 5.0 with high probabilities of happening. Now, this tool I use down here is called the zigzag tool, and you will be surprised how accurate the zigzag tool is. This gives you a projection on where price is going to come, and that plays a big role into whether I want to be bullish or bearish that market, right? So let's go back in and look at some more trades, right? Feeder cattle, we made 973 on that one. You can see audio notes, you can see, you know, all the different charts and everything else that I've done. So when I win or lose a trade, I like to go back in and, especially if I lose a trade, because obviously I don't win all the trades. I have losing trades, and like anyone else. And some of them I'll go back into the market. I'll win on one side and I'll lose on the other side. So I had a net gain on this one of $1,725. But I like to go back in and say, okay, did I do something wrong, or did I place the right trade? All right, and the market just went against me, because I know as a trader, it's really hard to keep your emotions out of trading. You know, you sit there and you say, should I get in? Should I get out? Why in the world did I do this? Why did I do that? Well, if you will keep your trading journals up, then you can go back in, like I said, and listen to yourself in your own voice and see your own notes and say, okay, this is why I got into that trade. I can't tell you how many times I've been into a trade and I sit there and, you know, go through the same emotions that everybody else goes through, and you wring your hands and you shout and scream and you beat your fist on the table and say, why in the world did I do that? Well, go back and look at your trading journal and say, this is why I did that. All right. And so I made the right trade based on the right indicators. I was following my methods, my system, quote unquote, that I put together to trade with. So I was doing everything that was right in that trade. I didn't do anything wrong. It's just that the trade went against me. Now, sometimes I'll go back in and I'll have a trade and I'll say, gosh, that trade's gone against me $600 or $700. Well, maybe it's gone against me $600 or $700. That's okay, because I'm going to show you some more of the stuff here in TradeMiner. Let me open, or from TradeMiner, let me open up Evernote again. And I can go back over here into May seasonals. So maybe I'm into a trade, maybe I'm in beans, and all of a sudden I look over here and I know that beans are supposed to be getting bullish, so I haven't gotten into that one yet. Wait, take that back. From May the 20th, all right, and getting out on June the 10th, that trade has made 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 years of history, and it's lost 2 years out of 11. So it's made money 9 out of 10 years, but it's had drawdowns, as you can see. So I go back and look and say, okay, I've got $1,000 drawdown on that trade. Is that normal? Well, I'll go back and look at the seasonal and say, yeah, that's normal. Right? There's times you get into a trade, you'll have $1,000 drawdown. Right? And then I'll say, okay, I'm willing to stay into that. In the past years, that's worked, and I think it'll work again right now. I made the right trade. It's just the market is going against me right now, right? Which happens to all of us, all right? Now, if you were to go over and start your own journal, I put one together here called My Trading Journal. And I've got trades in here, like we just put that one in there a while ago. For the Japanese yen, you could make another one in here. You could call it, you know, corn for July, or, you know, whatever market that you're in. Like I said, you can go in here and date stamp it, put your notes. Like I showed you a while ago, do a quick audio recording, record your notes, go in and cut and paste a chart, see if I still got one in here. All right. Obviously, that's not the right chart, but you get the idea. All right. And close that. And then when you're into that trade and you're looking at taking profits and you're saying, gosh, should I take profits now? Should I get out now? Should I move stops? Well, go back in and look at your notes and say, this was my plan. My plan was to get into this trade on this day, and here's the reasons why, and I'm getting out when price gets down here. Or if the price comes down here and hits this support area, I'm getting out of that position. Or if that position loses, you know, X dollars, and it goes against me X dollars, I'm exiting that position. That's my plan for that market or for that trade. And if you will learn to trade and learn to trust yourself after you've kind of come up with a system or a plan that works for you, and stick with that, and again, keep detailed notes about why you got into that position, and stay with your plan. Don't vary from your plan. You know, what's the old saying? Have a plan and stick to it. If I can't think right now the term, but have a plan when you go into a trade, and stay with that plan. What I found over the last 20 years is when I would go through a bad period of time, and I, like anyone else, go through a bad period. I lost $800 last month, right? This month we made $6,000 so far. But I go back through and I analyze. And I knew that last month, all right, last month I can go back through and I can look at my trades from last month, and I know by going in and looking at my losing trades, I lost 600, 500, I can live with that. 300, I can live with that. Live with that. Lost 1,500 on beans using options. Now, did I do something wrong, or did the trade just go against me when I got into it? All right. I did something wrong on this one. All right. And so I learned by that. You learn by your mistakes. You'll learn more by your mistakes than you will by being right, because they're more painful. And so go back and learn from your mistakes, analyze your charts, and say, okay, I did this one wrong. This is what I did wrong. This is why I lost the trade, or I was doing everything right and the trade just went against me. And learn by your mistakes and don't make them again. And what you will typically, or I typically found, is that I was doing the same thing over and over again for a long time. And then I would make corrections to the way that I would trade. I would get out of a trade too soon. I would get into a trade too soon. I'd be scared of a drawdown and not take a drawdown, and then the trade turns right back, and I get out with a loss when the trade turns right back around and goes back to where it was supposed to go to start with. But that's that fear and greed coming back in again. Or sometimes you get, greedy, and all of a sudden you've got a profit target of, $1,200. You say, okay, here it's $1,200 worth of profit that I think that I'm going to make on that. And so you've made that $1,200 and you say, gosh, I'm going to squeeze it. I know there's another dollar or two in that trade and I'm going to take it. I'm going to get out or stay in it and make some more money. There's that greed that comes in. Well, how many times has that happened to you and the market turns right back around and eats up your profits? I know that it's happened to me. All right. Yeah, Tom, it's big. You got to learn how to trust yourself. All right. But learn from your mistakes, and you will learn far more from your mistakes than you will ever learn from your wins. All right. Because your wins are pleasurable and your losses are painful. And so go back in and, be critical of yourself. If, the best way to learn how not to do something is go back in and say, okay, what kind of mistakes did I make on that? All right. Could I have entered that market a different way? Should I have waited for this to happen? Should I have waited for that to happen? Did I let my emotions get, in the way? Did I just think, I just think that market's going up. I don't have any real reason to think that market's going up. But I just think that market's going up and I want to be long. When all of a sudden you lose and you turn back around and say, oh my God, why did I do that? I had the indicators turning against me. I had momentum turning against me. I had slow stochastics, that was overbought and crossing down. I had moving averages. I had this or that. I made a stupid trade. And there's nothing wrong with losing. Well, I can't say there's nothing wrong with making a stupid trade. We all make them. But go back in and at least be honest with yourself and say, I made a stupid trade. I made a stupid decision. Just like I told you a while ago on the Aussie dollar, I made a stupid mistake because I got long the dollar with an Aussie dollar report coming out at 8:30 that night. And I woke up the next morning and I was down like $2,200 on that trade. And I said, well, it's hit a support area. I'm going to stay in it. I stayed into it for a couple more days rather than just getting out. And there's that fear and greed factor coming back in. I was down about, 1,200 or something. I said, well, at least it's going back up. I'm going to make it. And then all of a sudden the next day it drops again. I ended up losing $3,600 on that trade. I shouldn't have lost anything on it because my trading plan was, or should have been, to go in and see if there's some kind of economic report that's coming out. And I didn't even check my own calendar. So I'm preaching to the choir here, so to speak, to go back in and look at the calendars, see when those economic reports are coming out, and do not get into a market that has an economic report that's coming out within a few hours or that night or the next morning. Stay out of those markets because you don't know what those reports are going to do. And most of them can really, really move the markets. The ones that I have on the calendars here, under economic reports, well, you can go back over here and just look at one report or calendar called economic reports. And let's look at 4 weeks of economics. You can see all these are different economic reports that come out. And these are just a few. I mean, there's literally thousands of different economic reports that come out. And a lot of them aren't even worth looking at. only put the ones that I feel that are real movers and shakers, so to speak. All right. Like here's the New Zealand dollar. You see that came out at 4 p.m. And that was back here on the 10th. Right. The last one's at 8. I said they had one at 4 and they had another one at 8 o'clock. Housing starts come out on the 17th. That's a big event. So I don't want to get into a trade, you know, at 4 o'clock in the afternoon when that market's, you know, in, you know, currencies or something, or the S&P or the bonds or something, when we've got a report that's coming out the next morning at 7:30 that could drastically affect that market. So stay out of those trades. Same thing on seasonals, not on seasonals, but on USDA reports that come out. Now Larry's in here. Larry's a farmer, and Larry can tell you about USDA reports. All right. And these are different USDA reports, you know, that come out. And I also have the ability, and you would too if you subscribe to the calendars, you'll have your own calendar set up. And so you can see, you know, depending on which service you get, you can have the economic reports, the seasonal calendars, USDA calendars. I have something on the watch list. I didn't have any of this these days here. Special events, using autopilot and track and trade. We did a special event that day on that. So we have different special events. And then, of course, the webinars and the trade alerts and, you know, everything that goes with it. So even if you can't make, you know, a live webinar for some reason, you can always watch the recordings. But the webinars are using the same platform, the Zoom room that we're using now. And I think you would tend to agree with me that the video and the audio quality on it is very, very good. There's no lag time on it. The charts are crisp and clean. All right. So if you decide to set up a trading journal and want to get with me and ask me to, I'll send you a link. I think I got it in here. Shared information, shared notebooks, trading journal. Now here's an article that I did for a magazine called Pit News on do you really need to use a trading journal? And if you just email me, I'm happy to send you the link, and you can sit here and read the whole article that I did for the magazine about making check boxes, you know, looking at the weekly, monthly charts and seeing what they're doing, etc. So it's much more detailed than what I'm even doing tonight. And I'm happy to send you a link where you can read this. It's if you have Evernote, you can actually put it in your own Evernote file. If you don't, you can view it on the web. And so I could just save that if I wanted to. I could share that whole notebook with you. Say share notebook. I can make a public book out of it. I can send it to you individually. So just send me an email, and I'm happy to share that magazine article that I did. All right. And there's different videos and stuff that I've done with it. Audio files, audio notes, the article itself. All right. There's the full article. So that's in it. That's a Word document. You can open up the Word document, just read that. If you don't want to go through it on the web, you can save that. All right. So I'm happy to share any of that information with you. Just send me an email, and my email address is on my website. Just scroll to the bottom of the website, and you'll see how to contact me. There's my email. Here's my phone number, and I actually answer my own phone when you call, and I reply to my own emails. So I'm pretty easy to contact. For people that subscribe to the calendars, I do one-on-one webinars with people. So if you have a question on a certain trade that you're in, or a market or something that you're looking at, you can call. We'll set up a time. where we'll both have some free time, and I'll go in and I'll do a one-on-one webinar with you. I got another Sandra. Hi, Sandra. So if a report comes out tomorrow sometime and you're in the market, do you just watch it and move your stop losses, or do you get out? It depends. If I've got quite a bit, let's say that, good question, by the way, Sandra. Let's say that you've got, you're into a trade and you've got a profit target of $1,500, and you've got $1,200 worth of profit into that trade. Well, there's two things that you could do. You could move your stop to one tick below the market, and you know, hopefully the report goes in your favor. You could just get out and say, hey, I'm going to wait for the report and see what happens. You could move your stop down and give it a little bit of breathing room. That's a decision that you yourself have to make. I can't make that decision for you. But I can tell you that if I was into a trade and I had, you know, $600 worth of losses, and I had risk of $700 built into that trade, where I'm willing to take $700 worth of risk, and there's a report coming out tomorrow, I can promise you that my stop is going to be moved up to 2 or 3 ticks below the low of that day if I was long. So if that report comes out and it goes against me at all, I'm stopped out right then, right? If it happens to go in my favor, then that's good. That's well and good. But you need to adjust your trades, all right? I don't recommend that you trade reports. I know that some people do. Like every Wednesday, there's a crude report that comes out, and that crude report comes out. Let's see if it moves, how much that moved the market today. All right. Let's go back in and look at crude. Energies today. Meet screen, user financial indices, open up current energies. Right? And here's the crude oil report. Now that report came out this morning, and change over to a 5-minute chart. And you can look here on this chart, and that happened at 1 o'clock. When was that report? At 10:30 this morning. Here's the report that came out at 9:30. So this big bar here, see this big range that came out here on that 5-minute chart? And that wasn't huge, but that was a 5-minute chart, and that's when that report came out, right? So, Sandra, to answer your question, if I were, you know, long this market, and yesterday the price was up to here, and I knew that a report was going to come out that morning, before that report came out, I'd have to go into, well, it opened here 9:30, it opened a little high and then dropped straight down, which will happen a lot of the times when you see these reports. I can guarantee you that I would have moved my stop to just under the low of yesterday. I'd have locked in all those profits. So I would have gotten stopped out, but I'd at least gotten stopped out with some profits. And then I could turn back around after that report calmed down an hour later, and I could have got back into that trade in a long position if I'd have wanted to. All right. Then something else came out, and let's go back in and see today at 1 o'clock. All right. Did anything happen on the calendar today at 1 o'clock? All right. Here we have Wednesday. Let's go to today. And was there anything at 1 o'clock today that could have affected that market? FOMC, FOMC. That report came out today at 1 o'clock. So, does that tell you anything? At 1 o'clock, that report comes out and the market drops like a rock. Over here, crude report came out, or RBOB report came out that affects crude. Let's just look at RBOB, same time frame. Let's go back into a 5-minute chart, or we'll use a range 20 chart. All right, and see what happened this morning when that report came out at 9:30. How much the RBOB report, I called it crude report a while ago, it's actually an RBOB report. I'm not getting anywhere on that one. Let me try changing a 1-minute chart to a 5-minute chart and see if I can get some data coming in. That's not happening. Let me go to a 30-minute chart. I'm not receiving data right now for some reason, right? It's not letting me. But I can tell you that this morning, when that RBOB report came out, it affected heating oil, crude oil, all the energies. Let's see if I can pull up a quick chart on 30 minutes on this one, see if it'll pull up some data. No, it's not pulling up data. I got too many charts open and it's too late at night. Not pulling up data. I'd have to close out of this chart and open it back up. But anyway, you can see that the crude oil chart on that report, that market dropped. And again, this afternoon, when the FOMC meeting reports that came out, that dropped the market. Right? Let's look at another market today that would have been affected by that, and that would have been the S&P. Right? Let's see what happened. Go into an earlier time frame here. See if I can pick up a range 10, maybe. I'm not getting data, come on. Let's see if I can get 30 minutes here. I'm not getting data on it, unfortunately. Right? But I can tell you that this morning or this afternoon, when that report came out, that market jumped. All right? And that was supposed to have been, according to, all the talking heads, a negative report. Now I can tell you that it wasn't real negative, because the market closed right where it opened. And that's a little chart pattern. If you don't know what that chart pattern is in candles, that's called a doji, and it means market indecision. So the report probably came out, drove the market down, and it wasn't as serious a report or something as they thought that it was, or it could have been, and it jumped right back up, right? And it closed where it opened. So it wasn't a huge impact. But if I'd have been short that market today, before that report came out, you can see that it opened here, it came up here, and it came back down. Now, without knowing the time frame on it, I don't know when it went up, when it came down, but I can assume that the market opened here, climbed here before the report, and then dropped again after that report and climbed back. So if I'd have been short that market before that report came out, I can promise you I'd have moved my stops squeaky tight on that, to have locked in any profits or avoided losses on that. Would your question, a report comes out tomorrow, okay, I answered that one, Tom, but would your slippage not be huge in a case like that? It depends. Let me see that RBOB report. I wish I could get a tighter time frame. No, it's not going to let me pull up a 1 minute either. Yes, slippage can be a major problem, especially on an RBOB report or a report that really affects the market. Yes, you can have slippage. So I'm not going to tell you to get out, but I am going to tell you to keep very tight stops on things, but you can't have slippage in it. And like on RBOB, I've seen RBOB move $1,500, $2,000 in a matter of 5 minutes. I'm sorry if you hear my dog. Hold on. I'm Sorry, my wife's coming home. My dogs are barking. All right, but I can promise you that I would have kept squeaky stops on that. All right, but like I was saying on the RBOB, I've seen that jump up, like I said, $1,500, $2,000 in 5 minutes, and yes, you'll have slippage on that. And the RBOB report, when it comes out, it always moves the market. And I've seen it do crazy stuff. I've seen an RBOB report come out, it'll shoot straight up and come straight back down and then come right back to where it was, all within 10 or 15 minutes. So, I mean, be careful on these report dates. When these reports come out, I'd probably say 9 times out of 10, it would be best just to get out, especially when you have a major report. And you can look at the calendars. You'll see some of them. I got big check boxes on here. Those are the ones that can really move the markets. All right. I got stars over here. Cattle on feed is always a big report that can move the cattle market. And I need a note in here. I need to check that. That's coming out next Monday on the 23rd, and they didn't have an exact time. They said that's tentative. So I need to go back in and go back over to the USDA site and check on that and put the actual date and make sure that that report is proper. And I do that, just about every day. I'll look and double check on the reports that are coming out for the next day. All right. Would you slippage be a huge case? We've been going for about an hour. What kind of question do you have? What can I help you with as far as trading journals and those kind of questions? Scroll through the notes again here. All right. Something else that I do. Let's go back. Let's go to a 30-day, and I'll go back here to April, March, and at the end of March, I keep up with all my trades that I did for the month. And this is something that you can do, you need to be doing. You can do it in your own trading journal. And like I put my trades into a trading journal, closed positions, this is what I made, what I lost or something. So we made $7,200 that month. Commissions I said are about $10 a piece, right? So I keep up with all my closed positions, win, lose, or draw on how I did. I keep that in my trading journal. And I'll spend several hours a week going back through the trading journal and looking at my trades and trying to analyze and say, okay, did I make the right, like I said earlier, did I make the right decision and the market moved against me? Or did the market just do what it was supposed to do and I did something that I shouldn't have done? I jumped into a trade without a real plan behind it, without a good reason. I jumped into it based on just emotion or oh, I heard some guy on TV talking the other day and he thought the price of gold was going to go up, so I think I'm going to buy gold. Now, how many of us have been guilty of that? Listening to somebody else rather than analyzing the market yourself and trusting somebody else thinking that, they're the expert, I better listen to them. Well, I can tell you that I get so many news articles and press releases from different brokers, from different, traders, from everything else that come in, and they're right about half the time, and they're wrong about half the time. So it doesn't really do you a whole lot of good to, just say, okay, just because the guy on television said this is going to happen, then it's going to happen. You need to learn how to go in and analyze those markets, to analyze a chart. And if you need help on analyzing charts and stuff, I'm, happy to spend some time with you and show you how to analyze some charts. And with this software, I can actually turn the computer over, or you turn your computer over to me and everybody in the room, or if it's just a one-on-one, I can see your trading journal or your charts or whatever. You give me mouse controls, and it would be like you sitting by my side here and me showing you exactly step by step how to do something. All right. So I'm happy to do that, you know, with the people that subscribe to the webinars and everything else, become one of my students. Is there anyone in here that isn't one of my students, that hasn't, you know, doesn't have one of my any of my courses or something? I'm not here to try to sell you something. I'm just wondering if anybody in here is not a student. Yeah, Tom, I don't like the fundamentals either, but I like to know when reports are coming out. All right. So I guess everybody in here is a student. Tom, did you get just the commodities course, or did you get the options course too? I'd have to look it up and see. I don't like the S&P right now anyway. While we're sitting here looking at that, market is not trending. Market's going sideways. All right. Well, if you don't have any questions, I'm going to wrap it up. But again, go to evernote.com, and I'll show you how easy it is. If you don't have Evernote, go to evernote.com, and you get, did I type it in right? Nope, Evernote. Evernote.com. And sign up for free. All they need is an email and a password, and get your free account. And then, by the way, anything that I share, like on my journals and stuff, if you have Evernote and I share my journal with you, like I share this notebook with you, or my chart books, you know, for the month, I actually share that with the students that are in the webinars, and you can open that and you'll have my chart books with all the seasonals and everything else drawn out on them, and you'll have that in your own Evernote file. All right. So you'll have all my chart books and everything else, and they'll be right in your own Evernote. And if you're using track and trade end of day software like we're using here, I said I'll share my chart books. I meant I'll share my Evernote journal with you, but I will also share my chart books if you're using track and trade end of day and you join the webinars. Then I'll send you at the beginning of the month, I will send you my chart books, and they'll have all the seasonals and everything else all drawn out on them, so you don't have to do that. So when you open up your charts, you'll see all the seasonal positions and everything else already drawn out on the charts. So as you're looking at those charts, you can say, hey, wait a minute, we've got a seasonal trade coming up here. All right. And you'll also have access to the others, you know, with all the seasonals drawn out if you want that one. Like you'll have this this Evernote file, so you can just scroll through and you can say, hey, I'm looking at gold. What's going to happen on gold? Well, gold is supposed to be from March the 2nd through the 18th. That's supposed to be bearish. It's rated 3.8, high probabilities. And it's 1, 2, 3, 4, 6 years of history, and it's made money 5 out of the last 6 years. All right. And so you'll have that information that you can open up in your Evernote journal or in your chart book if you're using Track and Trade end of day, right? But please start using a trading journal. You're going to learn so much about yourself and the way that you trade if you'll just use a trading journal. And Evernote has some great sites on how to use Evernote, different ways to use Evernote. I keep pictures in mine. I keep files in my Evernote. You can share Evernote, like I was showing you a while ago, with other people. I've got all my course materials in it. People ask me sometime about, where I live. So I keep pictures, in my chart book. There's my little town. That's where I live here in Panama. I do a lot of traveling around the world. Here's Mel Gibson came down, and he was at our clubhouse in Valle Escondido, and we sat around and played poker one night. I actually landed a helicopter, and that's my backyard. And Mel came in. I don't know him. It just happens to be the heliport's in my backyard. On my rides in Peru, so one of my toucans, there's Bonnie. I had Bonnie and Clyde. So you can keep all kinds of stuff in Evernote. All right. Here's me on my motorcycle going to Pedicey or somewhere here in Panama. So, I mean, there's all kinds of things that you can keep in. Yeah, Tom, a whole lot better. Here's my pet monkey that we rescued, Bubba. And I bought Bubba. He was discovering his fingers at the time. And I decided he needed a motorcycle, so I bought him a little Harley. So, I mean, just different things that you can keep. There's a ride in Argentina. I mean, so I keep all kinds of stuff. And if people ask me, here was I call her my girlfriend from Ecuador. And this little lady was making hats. And that was one of my rides. And she'd been making these hats since she was 12 years old. So if people want to know, well, tell me something about yourself, I just send them this. Llamas in Ecuador. So you can keep all kinds of stuff in Evernote. You can share files with people. You can have a folder or something if you want it for your family, and everybody can put their own pictures in it, and you can put your pictures and events of what you're doing. Your kids can, your parents can, your relatives can. Everybody can share that same notebook. So it's a really cool program, and the price is right. It's free, all right? And for coming tonight, if you want a course, I normally charge $100 for this course. Email me and say, hey, David, would you send me your Blips course? And I'll send you my Blips course for free. And Blips are a chart pattern that I came up with. It's got audio videos with it. Talks about how to trade Blips. And just for coming in tonight, send me an email and ask me for the Blips course, and I'm happy to send that to you. For coming in. Does anybody have any questions on journals or how to use these or anything else? No, I use the live platform. Because I place trades during the day and I place the trades directly on the software. So somebody had to go put their kids to sleep. All right. So if nobody has any questions, I'm gonna end this, and I appreciate you coming in. And for the people that couldn't make it tonight, I had several people that said they wanted to come, but they couldn't. They had ball games for their kids tonight, or something, and they couldn't make it. So I'm going to record the webinar, and I'll have that posted in the calendar so people can come in and do that. And if you want to, now I'm not trying to sell you something, but I've had some people ask. You can come in and get any of the calendar programs. We got different subscription things here, and you can get 14 days for free, right? So that's my big sales pitch. So if anybody wants to, try out the calendars that we're doing, you can come in and try anything out, and it's free for 2 weeks. Just go to the website. If you have any questions, like I said, send me an email, give me a call. I'm happy to talk to you and answer any questions that you might have. So, like I said, my wife just got home, and so it's time for, you convinced me to keep a trading journal. Good. Larry, about time. I've been telling you that for ages and ages. Because it helps you control your emotions, and your emotions are one of the, the worst enemies that a trader has, are emotions. And a trading journal will help you avoid a lot of those, gut-wrenching times that you're having. When you're into a trade and you said, I don't know whether to stay or get out, or, what I want to do. All right. And back to my picture that we started with here. Two of the greatest qualities to have in life are patience and wisdom. So keep that in mind. And again, I appreciate everybody coming in. So I'm going to close this out unless somebody has a quick question. Okay. All right, everybody, take care. And I'm going to stop the recording. I'm going to end the meeting. Have a good evening. I appreciate you coming in. Take care.